Hello everyone, this is Matthew Frailey with BreakpointTrades.com. We've been bringing you advanced technical analysis, market commentary, trade ideas, and mechanical trading algorithms. Like you see here with our SPY and ES mean reversion systems, we have 21 of those systems, and we have of course our KISS trend following systems. By the way, today on the KISS systems, Tesla had a new smart trailing stop generated. The system went long back in early July. It's been holding since then. And also, as you know, the market's been quite oversold, and quite a few of these mean reversion systems that we have taken trades, as you can see here. Actually, today, another system triggered. This is the RSI oversold system. Pretty kind of self-explanatory a little bit, but there's more logic than this. The RSI oversold. It took a position today. It actually took a position just over a week ago, closed out for a minor winning trade, and it went long again today. So we have quite a few of these mean reversion systems in trades. Usually when you start getting this many systems in a trade, market's close to some sort of better bounce. So we'll see if we get that. All right, guys, let's go and get back to the newsletter. So this is a technical analysis review of the market, and it's October 4th, 2023. This is our back-end recorder for our website. I'm going to go ahead and get this started. Hello, everyone. This is Matthew Frailey with BreakpointTrades.com. This is the Wednesday, October 4th newsletter. Tonight's newsletter, as you can see, divided into 7 major sections. I added a couple different setups, or a couple new trade setups, not too many. Really, the market, except for a bunch of shorts and everything else, it's been better to focus on indexes and not put out too many ideas. But we are quite oversold here. We'll see if we can get some sort of bounce out of here. But remember, the onus is still on the bulls, guys. Any day you could have something break, and all of a sudden, futures are way down. So we'll see. But we do have multiple, as I show in my text here. The market sold off strongly on Tuesday, but that sell-off created a pretty nice MACD divergence on the 60-minute time frame, or the 2-hour time frame on the S&P, and also there's a double positive divergence on the 60-minute. Now I'll talk about what I mean by that when we get to those charts. Also, you could potentially count 5 waves down. This could also be a wave 4 still, but things are looking where we're either close to some sort of trade low, or we could get one more move down, but we're getting close. Today, both the VIX and the VVIX closed back inside their Bollinger Bands. So officially, that's a VIX Bollinger Band buy signal. The 10-year Treasury deal, as you know, that's been on fire with bonds selling off. So the 10-year actually pulled back. It was an inside day, though, which means it was within the candle of yesterday, but we did get a pullback there in the 10-year. And of course, the dollar also closed down. What obviously helped the market today were the big cap tech stocks. Again, the issue I have with the market is just how strong of a weighting, 7 to 10 of these large cap tech stocks have on the indexes. It skews everything. The stocks under the surface, do not reflect what the indexes look like. Anyway, tomorrow we have initial jobless claims, and then Friday, of course, is the big jobs report. Next. Image number 2, or first image below, item number 2. These are the open mean reversion systems. This is the KISS trend following systems. Remember, the KISS trend following systems are long only. They buy when the indexes or individual stocks are uptrending. They move a smart trailing stop up over time to protect profits. Okay. The mean reversion systems are mostly in cash, and they look for statistical oversold conditions where things are too stretched. They look for at least a mean reversion bounce. And I have 21 of these mean reversion systems. All of them are looking at different things. I have things looking at RSI oversold, looking at the CCI indicator, looking for a divergence, all kinds of different things. All right. But today, the RSI oversold system went long again on SPY. It had went long the previous week and exited for a minor winning trade, and then went it long again. And by the way, the statistics on that system, there's not a lot of trades. It has 100% winning trades, but only 14 trades since 2000 or since 1995. So, you know, about 30 years that the conditions to trigger that system has only occurred 14 times. So it's pretty rare. Doesn't happen very often, but it did take another position today. Again, you have all these other systems that are long in various second or some of them are third entries. We'll see if should we get a further rally or the market has a decent rally, we'll start seeing some of these exit. And of course, I'll let all our subscribers know via trade notification email. Next. Item number 3 shows the index sector table, what transpired today and this week. So today, major indexes were up. Even the Russell closed flat. The Russell has been absolutely beaten to hell. I think it's down like 4 or 5% for the year now. I mean, contrast that with the NASDAQ that's still up, what, 30 something percent for the year? So, one reason is the banks' financials are in there, which have been pummeled with these high interest rates. Right. Plus, remember, the market is dominated by about 7 to 10 stocks on a weighting basis. Well, those stocks aren't in the Russell. So the Russell is more representative of the carnage that has been going under the surface for individual stocks. Not things like Apple and Amazon and Tesla. Okay. Those are the dominant stocks that skew the things like the S&P and the NASDAQ and make them look stronger than what a lot of their smaller components are beneath. Anyway, enough about that. For the week, the tech area is slightly up. The Dow's, S&P and Russell, especially the Russell, down over 3%. As far as the 21 market sectors we follow, most of them were up today. Only 3 were down. And what has been weak? Energy. Remember, a few weeks ago, I warned about energy being very overbought. The bullish percent energy index was up there at 96%. I said, do not chase those. That area is due for a correction. Finally, we're getting it. Okay, that's a welcome relief. Crude oil was down like 5% today, so huge sell-off there. And currencies, U.S. dollar, again, finally a pullback, 0.3%. Still up for the week, obviously. Cryptocurrencies were sort of mixed, but mostly down. Commodities, despite the dollar pulling back, they were all smashed. Only thing that was up was natural gas. But, again, the big culprit of commodities was this crude oil, down 5.6%. That is one huge day. Okay, down 7.25% for the week. The commodity index itself down 2.8%. Gasoline down 6.4%. That's a welcome. Copper, the ags, everything down there except sugar. Precious metals still closed down. Again, this area has been absolutely pummeled. It is getting quite oversold now, especially GDX. And again, like I said on the bonds, TLT finally bounced today. The 10-year was down. Next. Item number 4 is the economic news calendar. Like I said, initial jobless claims on Thursday, trade balance, natural gas inventories, and of course the big jobs report on Friday. All right, let's go ahead and move to these index charts. First, we like to start with our proxy, the S&P 500. Here's the weekly view of the S&P. It's down about 0.6% for the week. Again, as you know, if you've been following us, we were calling for the market to top out in late July and to have a correction into August, September, and that has transpired. And we're now into early October and we're down. So we were right at the top of the channel, right at this resistance. You had RSI divergence, seasonality. I mean, everything's set up. Just, the technical is set up, seasonality is set up. So far, we have 3 waves. Again, the bearish view would be a wave 3. The more bullish view, where you could still go back to the highs, would be a C. We've tagged at the bottom of this channel. So far, we've bounced a little bit off of it. Moving down to the shorter time frame, chart number 6. Here's the daily. Again, we shows you that same channel. That was an excellent area to short very heavily. Then we formed a coil. You could have also shorted that. We tagged the channel, bounced a little bit off of it last week, stalled the 9 EMA, Sold off yesterday and regained the channel for now. We have the 200-day moving average just a hair's breadth away. Next. Chart 7, here's the zoomed in daily view. Again, same counts I showed the other day apply. A or 1, B or 2, C or 3. And again, we've gotten to this open gap, which I was stating was a magnet. We filled that. We undercut it a little bit. We got pretty close to the 200-day moving average. Today, we have an inside day candle within the candle range of yesterday. We have some RSI divergence. Again, things are quite oversold here. We are in an area potentially to put in a decent trade low. Could the low be in? It could. One thing that concerns me a little bit is the 200-day moving average is so damn close. A lot of times it'll be a magnet where price wants to tag it or undercut it a little bit and then reverse, but we'll see. Next. Chart 8, here's the KISS trend system. Again, these are opposite of the mean reversion systems. They're long only. They attempt to hold trends, uptrends, and they caught a nice trend from March to August, and then it had a little whipsaw trade there, which is typical, but that's fine. Usually after a whipsaw, the odds for the next trade are pretty good for a winning trade. Next. Chart 9, here's the 4 time frames we like to follow. So on the S&P, the 78-minute, yesterday we had a end of bear cycle there, support cycle, and you can see price has been responding to it. We're below the ATR, and of course on all these time frames, which would bring a resistance. Next. Chart 10, here's a half-day chart, and this shows you one of the potential wave counts where this could still just be a wave B, and then we come down again in C and finally complete that, wave 5, and then we have our decent, end of year rally or whatever. Okay, so that's definitely a real possibility here. Another one, let me show you, is this one. This is a 2-hour time frame. It's possible we also completed this 5th wave. Okay, we have RSI divergence. We have MACD divergence. Whenever I start seeing good MACD divergence, not just RSI divergence, that's usually a pretty good risk reward to take a shot. So next, chart 12, here's a 60-minute view. Again, you can see that, we had that 4th wave bounce that we talked about, and it stalled at this supply zone, and then we've come all the way down and made a new low. And again, this could be a wave 5. So again, decent risk reward. Okay, like I said, we could still come down again, but decent risk reward. And here's what I talked about. Remember on my opening comment, I mentioned a double positive divergence on the 60 minutes. So here's what I mean. You had a positive divergence here at this low, this wave 3, where we got a bounce. MACD rallied up near 0, came in, formed a second positive divergence. So it's 2 divergences in a row. And this divergence is closer to the 0. That's a much stronger divergence. Whenever the divergence on a MACD, and the MACD is really far below 0, you can get a bounce, but usually it's just a bounce that's faded. You're really good bottoms form when it's much closer to the 0. So it looks pretty decent there. Chart 13, here's a 30-minute view with a channel. One potential target as well to monitor is the top of that channel line. Finally, chart 14, here's a 15-minute view. Again, we bounce into the day. There is a little supply zone here. We'll see if we can get through that or not. And let's move on. Chart 15, here's the triple Qs in this channel. Again, triple Qs, like I said, look how far the triple Qs are above the 200-day moving average. Remember, the S&P is right near the 200-day moving average. It shows you how much stronger this area. Again, heavily skewed because of things like Apple and Tesla and Meta and Google, etc. Next, chart 16, another daily view. This shows if kind of like an ABC, if this move equaled this move like a 1-to-1, it would measure to here. We didn't quite make it to there. Doesn't mean we won't come down again and tag it, but pointing that out. Chart 17, here's a half-day chart. It shows you some potential wave counts. Again, we had, this could be a wave 4. We could still come down again in a 5, potentially. There is an open gap down here as well. Chart 18, here's a 30-minute chart. So far, we do have a little slight higher low there. Chart 19, here's the triple Q's KISS trend system. Now in the KISS system, you caught it caught two nice winners in a row, one in January into late February, then a monster one in March into early August. Then it had the typical whipsaw. Remember these trend following KISS systems, they usually have about 60 to 70% on the high end winning trades. A lot of these have about 60% winning trades. So you do get quite a few whipsaws, but they make money because they'll catch these big trenders that are more than make up for those little whipsaws. Again, complete opposite of the mean reversion systems. So these are flat, they've been flat, and we got a bunch of mean reversion systems long looking for a bounce. Chart 20, here's the 4 time frames. So you can see on the Qs we had the Mark 9 last week, which so far has marked a low. We're below the ATR in these time frames. On the 78-minute, if you listen to last night's newsletter, price tagged the ATR. It held it as support, which was positive. Then we had an end of bull cycle, bicycle here, and so far we've rallied from it. Just looking at some of the things in the NASDAQ, the big weightings, here's Apple. Again, this short that I called back in August played out excellent, especially that lower high wave B. So far, we've got a little bounce here. Again, Apple's such a huge weighting, so just Apple being up, like 1% during the day helps the indexes a lot. Chart 22, here's Tesla, had a great day. This is the KISS system for Tesla. This is right from the website. The KISS system went long back in May. Then it exited in late June for a nice winning trade there. Then it had a little whipsaw trade here in July, and then it went back long again in August. And today it raised its smart trailing stop to 240. This is the 4th time it's raised its stop since that original entry in August. So protecting those profits. Next, chart 23, here's IWM small caps. Again, absolutely punished this year. Perfectly tagged the top of that pattern that we had in place, since we've had this triangle type pattern in place, guys, since way back in March and April. So we were down here at that, we rallied all the way to the top, and then we've sold all the way down. You can see the slanted head and shoulder pattern, which obviously played out, and we even broke that lower trend line. Now, a rally up, I'll say that this area is resistance. Remember, this is more indicative of what the individual stocks in the market have been doing under the surface, not things like Apple and Tesla, stuff like that that's held up. That's the huge weighting. But also this represents the banks and financials, and we all know what's happened to those areas. Chart 24, here's a 30-minute chart. You can see that wedge played out. We do have a little level here in a monitor. No MACD divergence there, though. And the MACD, remember, really far below zero there. So this still needs a lot of work. All right, guys, that does it on the indexes. Let's move on. Here's some indicators. Here's the VIX. Like I said, the VIX closed back inside its Bollinger Bands today. So officially, that's a VIX Bollinger Band buy signal. The VVIX, the volatility of the VIX, also closed back inside. Chart 26, here's the NYSI. Remember, this produced a awesome sell signal back during early August. You could see all the previous buy and sell signals have been pretty excellent. Again, they're not going to catch the highs and lows, but around 80% of the trend, which is good. Obviously, nowhere near giving a buy signal. Remember, it's not going to get you in at the lows, guys. Okay, but you can see prices trying to hold this uptrend line here for now. Chart 27, here's my other mechanical system, the weekly NYSI. It uses a trigger on the candles. So, really this needs an up candle that's going to take out the open of this candle this week. So maybe something to watch for next week, perhaps. Chart 28, here's the percentage of stocks in the S&P 500 that are above their 20-day EMA, exponential moving average. This did get down to 5% yesterday. Right around the March lows, so it was quite oversold, and you do have some MACD divergence here relative to the indicator. Remember, back in July, this was up here in the 85, 87%, and you had a negative divergence there. right? So that was another confirmation of a sell-off, but now it's quite oversold. Chart number 29, here's the NYMO. The NYMO closed below its lower Bollinger Bands yesterday. That was also a very oversold reading. We also have a positive divergence between price and the NYMO. All right, moving on, let's look at some individual sectors. Chart number 30, here's XLE, energy. We'll look at that first. Essentially, I like a double top here. Remember, I was warning about the overbought area here, and look at this dump. Nice to see this, actually, because I exited all these energy stocks several weeks ago, and I'm looking to eventually buy them back. Chart number 31, here's oil services. This is the one I shorted. You had a perfect wedge here. I shorted this lower high wave B or wave 2, and we're down in a wave 3 or C now. Pretty ugly. You could see that wedge played out. You had, again, looking at this, guys, you had 5 clear waves to the upside with a rising wedge and MACD divergence. That is textbook. By the way, guys, pro tip, if you ever have a wedge but you don't have MACD divergence, it's not a proper wedge. Okay, or fifth waves and proper wedge patterns always have MACD divergence. It's one thing we've learned. Okay, if you don't have MACD divergence, it's likely a wave 3 or something, kind of like this. Okay, you can see it's down near the 38% fib. Next, chart number 32. Why was I warning you guys about energy stocks? Back in late August, early September. The bullish percent energy index that measures, how overbought or oversold the energy stocks are in the XLE. It was up here at 96%. Remember, this is normalized from 0 to 100%. So it can't go above 100, can't go below 0. So this was extremely overbought, right? Now look how, and you got a sell signal here about 2 weeks ago when it crossed the moving averages. So this is another little system. Pretty excellent sell signal, wasn't it? This was an excellent buy signal back here in June when this was an overbought or oversold territory. So again, this is a pretty good system. You can look at the past signals whenever it crosses these moving averages. Again, it's not perfect, but it's pretty good, as you can see. Next, here's the tech area. XOK technology. Again, this area has been the strongest. Chart number 34, semiconductors, another area that's holding up very well. Some others that not holding up. Here's transports, IYT, all the way back to this lower trend line. There is a little RSI divergence here, and we're right at this trend line. Heck of a correction. Chart number 36, XBI Biotech. This area has been absolutely pummeled. Again, you can count potentially little 5 waves down here. See this? Wave 1, 2, 3, 4, 5. It's working on this 5. There is some RSI divergence here. Moving average ribbon is very wide. Remember when the moving average ribbons get too wide? You can think of that like a mean reversion, right? And when they're pinched, that's when you can get your big moves. So let's take a look at, this may be due for a bounce. Let's take a look at LABU. So here's LABU. That's the leveraged biotech ETF, 2-hour view. You have a falling wedge here and some MACD divergence. So one to watch for an oversold bounce. Want to see an area that's been absolutely punished? Here's airlines. Look at this. Absolute pummeled. Down 51 consecutive closes below the 9 EMA. That is impressive, guys. It's, again, quite oversold here. Divergence, remember, is not a buy signal on its own. Remember, divergence started way back here. Nice bounce today, but, it's got a long way to go still. There was some RSI divergence there at that low. Chart number 39, here's JETS. That's the ETF. You can see nice little update, still below its 9 EMA. Again, you have your RSI divergence. If you wanted to play a really oversold sector, this is one way to do it. Here's the 2-hour time frame. This is the one I like. I showed this the other day. Clean channel. You can see we got to the lower part of the channel. Nice up. Volume's picking up. We have a little MACD divergence here. Another area I want to see this clear is this little downtrend line here. And then, of course, this major one. Chart number 41, utilities. Again, this area has been absolutely pummeled with those interest rates. Finally bouncing a little bit. Again, it was very oversold here. Again, look how wide your moving average ribbon was. Chart 42, real estate. We all know the what's going on with real estate and interest rates and 8% mortgages, whatever. But anyway, getting quite oversold here. Little divergence, little bounce today, little doji. Chart 43, home builders. We had a lot of shorts on our watch list in this sector. They've been playing out. You can see it's getting nearer the 200-day moving average. Moving on to commodities, chart 44, DBC. Boy, look at this sell-off. Again, a lot of this is heavily weighted to crude oil. Crude oil is down 5.6% today, tagging the 200-day moving average. Chart 45, here's crude oil. Again, look at this candle, one of the biggest candles you're going to see on crude oil, right? Moving average ribbon was really wide up here. You had your RSI divergence, and you had MACD divergence. Okay, so everything was set up, and huge sell-off today. In fact, a little undercut of the 50-day moving average. If you want a positive for the market, this sell-off here could help some of the inflation case a little bit. May help the Fed a little bit. Chart 46, natural gas. This was the one that was actually up today. This is the weekly chart. I like this little pattern setting up. Chart 46, UNG, natural gas ETF. Remember, I've been showing this coil. Popped out a little bit of the coil today. Didn't close strong, closed with the black candle, but it did hold that trend line as support. Chart 49 or 48, copper. This is the weekly chart. So far, it's down 4% for the week. Looking pretty ugly. Chart 49, uranium. Again, this got very overbought over here with a 3-pattern push. Was due for a correction. Had a pretty good correction. I wanted to buy some around the 50-day moving average. I didn't fill today. Maybe I should have taken a little bit down here. I am looking to scale back into this because I like the longer term chart, the monthly chart. I'm not showing that tonight. All right, moving on to bonds. Here's high yield corporate. Market usually moves with this. Now, an inside day here. So, nice bounce, but, it's got a lot of work to do. Chart 51, here's the 10-year treasury yield. Weekly charts up 3.5% for the week. Here's the daily chart. Again, pullback today, but an inside day inside yesterday. Again, has to start somewhere. Is that a top or is this just a pullback and we go up again? We'll see. Chart 53, there's the monthly view. Again, reason why you've been seeing a lot of people target the 5%, 5.25% is this is your next resistance on this big monthly chart right up in here, little supply zone. Again, guys, look at my comments. You broke a 35-year channel line. That ended the secular bear market in rates, which was basically a 40-year secular bear market from the early 80s. So longer term, rates are up, guys. It doesn't mean we just go up, straight up, but don't expect rates to go back down here like they were. That's over. That'll be something for your grandkids or, whatever. It's going to be many years, 10, 20 years maybe. Chart 54, here's IY or TLT. Again, this moves opposite of rates, so this has been pummeled. Finally, a little bounce. And here's the monthly chart. This 5-wave pattern. Remember, I've been targeting this demand zone. Lo and behold, we tagged the top of that and we bounced for now. Again, you have a 5th wave low here. So if you want a case for an end of year rally in the market, would be if this puts in a 5th wave low and then it has some sort of decent ABC bounce that lasts months. That would help the market bounce, have an end of year rally. All right, moving on. Here's Bitcoin. Remember, we had this coil pattern. We busted out of it, but we're holding on to the coil pattern so far. Just taking a look at one of the individual names. Here's Mara. Again, these have been absolutely decimated from the July highs. I mean, look at this puppy. It's almost, price would have to rally almost 300% to get back to there. Anyway, quite oversold here, but, a little RSI divergence. But, I would need to trigger to even think about buying that. Moving on, chart 58, here's the dollar. And dollar pulled back a little bit today. But again, no changes in the trend. No MACD divergence, which is scary. You do have a little RSI divergence. Moving on to gold. Chart number 59, gold on the daily. Again, remember we had this coil set up, which busted hard to the downside. I am enjoying this sell-off in gold because I am looking forward to buying back into it. Right now, it's between the 50% and 61.8% fib. The stocks have been underperforming the metal, so remember the stocks lead. You know, the time you want to be long the stocks or the metal is when this ratio is going up. Chart number 60, another chart of gold, looks like a duplicate chart, just a little cleaner. Chart number 61, silver, again, huge, down 5.8% for the week, smashed this coil to the downside. Here's the daily chart, broke the pattern to the downside, obviously. Moving on to GDX, here's the GDX, again, these stocks have had a heck of a correction, lost that shelf support last week. You know, it's toward the bottom of this channel. It could still fall down into here, this range if it wants to. It is getting a little oversold though. Chart number 64, there's a zoomed out view showing the channel. This channel, we're closer to the part of that. There's a big open gap down here. Boy, hopefully it doesn't have to go there, but we'll see. Again, keep an eye on this ratio on the trend line. Chart number 65, here's a 2-hour view. Steep channel. Ratio is trying to curl up. Again, this may get an oversold bounce here, but here's the problem. Remember my comments earlier about MACD divergence? Look at the MACD. Look how far it is below zero. That tells me that a bounce from here is likely just some sort of fourth wave bounce or whatever, because what will likely happen is the MACD will push up a little bit and then it will come down again, form a divergence that is better. So right now the MACD is just so far here, I don't trust this is a decent bottom. Chart number 66, here's a 60-minute chart. You do have 5 waves here potentially, kind of a wedge look to it. It's a MACD divergence. But again, I think a rally from here will just be a bounce. Next, here's an individual setup in the miners. Here's GOLD, it's Barrett Gold. Notice this nice doji hammer candlestick. That could be a trigger. Long, hot, the trigger would be the top of the doji. And your evidence is the 60-minute chart of Barrick. You have a double MACD divergence here. What I mean by double is you have a divergence here at this low and another one right here. And again, look, this is my point again on the MACD. MACD is too far below zero there on this divergence, so it just produced a bounce that came down again. This second divergence is closer to zero, so it has more potential to work out. Chart number 69, here's the bullish percent gold miners index. Again, it's down there at 10.7%, so it is getting very oversold territory. Remember, it was way up overbought territory back in April. So this is getting lower risk finally. Now let's move on to some trade setups. Chart number 70, here's VLO. Remember, on the weekend, we gave some shorts on these refiners. These are the ones we gave. VLO, hell of a short from the weekend. Another one, PSX, refiner from the weekend. Look at that. Nice sell-off. Congrats if you did those. Following up on some other setups, CNK, I've had it in the watch list as a long. It's been holding up here very well. If you're long this, I'd probably just put a stop at today's lows now. Following up on some of these shorts, here's ACHR from that coil. Again, if you haven't taken some profits, please do so. You know. Chart number 74, KB Homes. Remember, we've had some shorts with these home builders. They've been playing out. Chart number 75, oh, Marathon Oil. Here's another short we had in the energy space. Chart number 76, PHM, another one of our home builders that we've had. And here's a new setup, guys. CAH, Cardinal Health. I kind of like this little setup. Nice pickup in volume today. Your trigger would be over the trend line. And chart number 78, AMD, one of our members have posted this. You do have a wedge-like pattern here, something to monitor. And that'll do it. Quick check on futures, guys. Futures, ES futures are down only about 2 points. They were down 10 points when I started recording, so they've come up a little bit. We'll see how they fare tomorrow. Have a great evening, and thanks for all your support.